And now I would request our next set of dignitaries and speakers to please come forward on the stage. I would request Mr. Sandip Barmera ji, COO, Godrej Housing Finance, to please come forward on the dais. I would request Ms. Manju Dalvi ji, Head Digital and Data, HDB Financial Services, to please come forward on the dais. I just got an information that Ma'am Manju Dalvi ji, she's on the way and very soon she'll be joining us. And now I would also request Ms. Tanya Chadha ji, Business Head, Capri Global Capital, to please come forward on the dais. Ladies and gentlemen, can we hear a huge round of applause for Tanya ma'am? Now I would request Mr. Rohit Tiku ji, Founder and Whole-Time Director of Abhiyan Capital, to please come forward on the dais. I would also request Srijan Nagar, co-founder of Finbox, to please come forward on the dais. And I would request Mr. Sudeep, Head-SME Credit, Arka, Fincap, and he is the moderator. I would request all of you to please put a huge round of applause for all the amazing dignitaries and speakers who are here on the stage. And as we all know, now the next panel of discussion is digitalization in the NBFC, lower cost, better than CX.
Thank you. So I think we are still waiting for a couple of our panel members to join. Probably before that, I think we'll start off. I think you got the introduction right now. So we are here to discuss on an interesting topic on artificial intelligence and machine learning, on how it probably it's transforming the NBFCs today in the way it operates, competes, and even serve customers. So today's digital landscape actually is evolving. It is giving a lot of expectations and new possibilities. So as we speak, AI and ML are already reshaping the way we do credit underwriting, risk management, fraud detection, customer engagement, and even regulatory compliance. So the question is not longer whether we have to adopt it, but to how and what extent. How do we ensure responsible innovation? And how do we balance the efficiency with the trust part of it? So to discuss more on this topic, I think we have joined here with an exceptional panel of leaders who will obviously share their perspectives on how AI and ML are changing or reshaping the current NBFC ecosystem. So without much ado, I think I will start off the panel discussion. I have framed a few questions for you guys. Probably in a better way, you can probably explain the details on this. So I'll just take the help of that. Yeah. So to start with, Tanya. So just a question to you. Yeah. How is digital transformation reshaping the NBFC industry beyond cost reduction, particularly in areas like scalability, regulatory compliance, and building customer trust?
Well, on the cost, there is no doubt that it has been a huge advantage. I'll pick this up one by one. On scalability, when you have a cloud-native platform, the volume is not a concern. I mean, today when we are looking at TSP, we never ask this question, which was one of the key parameters to decide is, can they handle volumes? Secondly is that today the platforms are easily customizable. Initially, first the platform was taken and the products were designed. Today, the products are thought first, and then the platforms are customized. So scalability is almost there. People don't think that we cannot scale anymore. On regulatory compliances, if today you automate a regulatory requirement, you can achieve 100% compliance. You have done away with human intervention where, he feels that I think so, to do KYC like this is okay. No. Or let's just move the application and we can do KYC later on. So, you are more compliant if you digitize your regulatory requirement. Secondly, the robust audit logs that you get today enable more conviction with the regulator rather than my word against yours. Instead of sitting across the table and then showing them some process notes, or sometimes even putting emails across that this is what we have done, etc., etc. I think so the audit logs are far more convincing. Thirdly, on the customer experience, there is no
Tanya,
doubt.
I'm sorry, I'm just interrupting you for just 1 second. Actually, Ma'am Manju Dalvi has arrived over here, and I would request Manju Dalvi ma'am to please join us here on the stage, ladies and gentlemen. Head Digital and Data, HDB Financial Service. I'm sorry, ma'am, for interrupting.
That's all right.
Sandip sir is also with us. Sandip Barmera ji, COO, Godrej Housing Finance. Ladies and gentlemen, can we hear it for Sandip sir and Manju ma'am?
So coming back to customer experience, as far as digitization is concerned, we all know how good our experience today is with various apps, financial apps that we have on our mobile. Everything is available at a click of a button. How many of us have ever been to a branch for years now? No. In fact, every information is available at a click of a button. The services are so good that you don't even need to call your RM. So as far as digitization is concerned, all these three aspects have seen huge progress, and still there is more to come.
Yeah, thanks, Tanya. Just probably I would like to have some more flavor on the scalability part which you mentioned. So if I have to classify the NBFC segment and the ticket sizes, probably the micro ones which we are discussing a bit time before, or the mid segment or the higher segment. So where do you think the impact of scalability is larger?
See, it is larger definitely if you look at a small ticket size loan or maybe an unsecured loan, all ticket size I would say. Because the documentation requirement is less, decisions are instant, the underwriting criteria are almost standard across the board today. Secured to an extent with respect to one, onboarding the client, to assisting your sales team. Today there are enough AI tools which will, index your documents, will even end up filling the application form for you instead of a boy standing with the client, wasting half an hour and trying to enter details in his app. Your PD sheets, your prompt questions, everything is automated and available. Nobody today has to, open a file today and go by every document, read, prepare a questionnaire, then go to the client. So each product, each ticket size is seeing a lot of progress. Hopefully with the digitization of land records across the state, maybe even secure lending will benefit to the extent today how unsecured is benefiting.
Thank you. Yeah, Mr. Rohit? Yes, probably would like to have some insights on how you imagine risk modeling and particularly a digital underwriting part, and how do you plan the pricing in sync with the AI and ML catering into the small segment of the NBFC segment.
Hi. Well, the financial services sector or the BFA sector actually has been one of the earliest adopters of various kinds of these advanced analytical tools or regression tools or various kinds of data analytics solutions which were there, and we were one of the earliest adopters. And the primary reason for that being that since the lending business is about risk management, and you cannot do risk management or risk mitigation without analytics, so it goes hands in hand. So financial services has been using various kinds of tools over a period of time. It's just that in recent years, with increase in computing power, with the advent of generative AI and LLMs, that this overall AI, ML, all spoken together, is encompassing everything which used to happen previously and which is happening now. It's become quite the buzzword, and but to a certain extent, yes, we have been already doing it before. Fintech was a word which was coined. So lending industry has been using various kinds of tools for a very long time, and primarily for risk analytics. And but the impact that we have seen in the last couple of years with the actual generative and LLM, in my opinion, is yet to be felt and yet to be consumed. Because I feel that the disruptive capability of these two technologies is something which has not been unearthed. Right? Today, we are using various kinds of tools based on various kinds of AI models. It may not be AI models, but we still call them AI models for the entire lending journey. So if you look at our entire lending journey, whether it is, and in the lending journey, you come across various kinds of decisions you make, and eventually the success of a company is the quality of decisions you are making, right? Whom to lend, where to lend, what price to lend, how much to lend, right? At how much tenor you lend. So various kinds of, and if the customer defaults, you have to predict who is going to bounce, who is going to default. If he defaults, what strategy I have to adopt, what strategy I have to do to collect, what strategy I have to do to ensure my ECLs are managed and reduced. So at every stage you have to make decisions. And today you have various tools available today to help you make those decisions, right? So for sourcing, there are so many tools which are available, whether it is doing a propensity model, whether it's a geographical heat map, you decide which pin codes I should lend, where the opportunity is there, whether it is a voice bot or a chat bot through which you source the customers, you underwrite them, pre-qualify them, do a pre-eligibility check, or during the entire underwriting process, whether you do an income assessment, you do credit bureaus have been one of the earliest tools which have been used. So you do a credit underwriting, you do a bank analysis. So all those tools are available, and there are many more tools which are now coming up from fraud analytics perspective, from fraud check perspective, I'm into secured loans, so from a property evaluation perspective. So at every steps, more tools are coming, which will help us to improve the quality of a decision that we want to do. But in my opinion, these are all incremental improvements, right, that we are taking. They are not capturing the full impact, the power which the twin technologies of Gen AI and LLM are about to create. I think we are yet to see the full impact of that, and I think it's over a period of time we will be able to assess what actual impacts they have had on primarily risk management, because ultimately the core purpose of any lending institute is to risk management. So unless these technologies do not help you to mitigate and manage your risk adequately and appropriately, and especially in a country of India, I think the full advantage will not be realized. So they actually have to help solve the real problem of risk mitigation, because unless you have a strong risk mitigation practices, strong risk management practices, you can't scale up, right? It's going to be suicidal. So there are huge opportunities, some incremental things are happening, but I think there's a lot things which remains to be done, in my opinion.
Thanks, Rohit. One more point. So how do you think that there is a correlation of automation to pricing?
Well, in pricing, you say, right? of course you can do, and you don't need AI and Gen AI to do that. So risk-based pricing models have been in existence for very long. Sales team that doesn't believe in those models, that's another challenge. But practically you can always do. In my previous company, we had a risk-based pricing where for every customer, you could have a particular price based on the risk categorization, based on the expected ECL of that particular customer, based on various kinds of tools you could do. So you can price, you can figure out what is the expected ECL, and you can come to a very person-specific pricing. There's no earth-shattering technology which is required to do that. It can be done, Gen AI or not Gen AI, even otherwise you can do it. And people have been doing it, but it's not been very successful in retail, primarily because for a variety of reasons, it's not been very successful. And honestly, that's the biggest challenge when you use AI, because see, who are the biggest users? So if we split the spectrum of all these technological innovations which are happening, so you have two sets of people. One who are very technologically savvy, the new breed of technology players, which you call them fintechs, everything, who adopt all these technologies like fish to water. So they use it very intensely. And then you have the larger traditional players. They're the resistance to use of these technologies to replace or to challenge the judgment of human is something which is the biggest challenge today, right? And unless the traditional people don't embrace technology, I don't think the full impact of all these technologies will be visible. We have seen that what is the use of technology or all these models which fintechs have done to the ecosystem, right? So there has to be a method where you use technology, you use traditional wisdom and blend the two, right? So unless the traditional people or the traditional players in the ecosystem value the role of AI and believe that an AI decision or a system decision can be better than a human judgment, if you don't cross that Rubicon, the impact of all these technologies is going to be limited, in my opinion.
Thanks a lot. Yeah, I think that's quite probably an interesting topic also to others. Yeah, Srijan, I'll come back to you. No, I'll come back to you. I think I'll leave it to the last. So, Manju. Manju, do you feel the chatbots and AI are reshaping the new age lending? And how do you see the impact of it in a service turnaround time and the regulatory compliance part of that?
Yeah, good afternoon, and thanks for the question. Absolutely. Actually, I see chatbot and AI actually contributing a huge in the new age lending system at a high level of 3 levels of tangible benefits. First is cost effectiveness, or first I'll say speed to market, or SLA, service time, SLA. So by automating something which is, in terms of service requests or service inquiries like the pending EMIs, the KYC statuses, etc. The customer is able to know these details immediately without a dependency of any customer support team being available at any point of time, 24/7. So by adopting this methodology, those customer support team can actually start working on something that is really worthwhile or complex. Second, what I think is cost efficiency. So what I think is automating high volume, low ticket, inquiries or service requests using chatbots actually reduces our dependencies on the telecallers, etc. So for NBFCs, which have millions of customers, to service, automating these type is a huge cost saving over there. And third vertical which I see that can come in is personalization for the customers. So today AI just does not speak, it actually learns. So if the customer's profile, if the AI is able, or the chatbot, AI-enabled chatbot is able to learn from the customer profiles and his preferences, then it can actually prompt to the customer basis his needs, may it be what is the repayment schedule that he could go for, or his wealth wellness tips, etc. It depends upon the use cases. So what I think is at HDB also, we have seen that by implementing small AI tools or chatbots, it's not a huge, but we have seen that customers' trust and belongingness have increased because they feel that they are heard instantly and personally. So for me, AI chatbot will not replace a human, but it is actually delivering services with speed and cost effectiveness, and obviously with a human touch. Yeah.
Thanks, Mantu. Just to add on that, now I think we are all having our phones getting landed with a lot of calls and messages, especially to enhance the customer experience. But do you think that is actually adding value on a customer experience perspective? Because we all, I think, are equally affected by that. I don't want to name a few NBFCs or the banks on that, but do you think that it is actually enhancing the customer experience, or where do we stop it, or how extent can we go on that?
No. So if you understand, just few years back, even from my personal experience, if I have to apply a loan, I had to actually wait for around at least 4-5 days to even understand if I'm eligible. And I had a dependency on, a person who was in touch with me. Now, if he's an existing customer, I'll take an existing customer example, and then I'll come to a new to bank. If he's an existing customer, then with my mobile app, if I want to see what are the products and I want to see my eligibility, it's on the click of button that I can see with the same bank, am I eligible or not, for that. I need not chase anybody. Now, if it is a new to credit customer, today, even if we bring automation of AI in the credit piece, which I want to add over there, it is not only for the bureau scores that we do credit scoring. There are multiple things that today organizations are adopting in terms of spends or, their cash flows, etc., or their GST filings, etc., basis which even a new to credit person will instantly know his eligibility. So I do believe that yes, today maybe it is not be in a very advanced stage, but going forward, yes, it will be a value added, but with a caveat saying that, as I said, the data that we give to AI for learning has to be, verified properly. The models that are being built has to be audited, and data privacy has to be taken care. Yeah.
Thank you. Yeah, thanks a lot. Yeah. So, Sandip. Yeah. So, it's just a bit more probably enhancement on the customer experience part, which I would like to have a few words on from you. Sure. How do you strike a right balance between delivering a seamless customer experience and meeting the stringent regulatory compliance, especially the KYC, AML kind of thing? So how do we draw it, in close by, so that we are not going this side or the other side, probably not going a bit more aggressive on part from the NBFC side? Yeah.
Sure. So I'll take this in two parts. I think let's just take the loan origination as an example, and if we were to get there. So first, the AI landscape. What I think is that, we all believe that AI is something that's, come up very recently, and something which is, the hype of the season, the flavor of the market right now. AI has been into existence since a long time now. It was first there in 1950, right? The reason why it is very hyped right now, or why it is very useful right now, is just because the aspect that was missing for a long time is now available, and available in abundance, and that is data. Right? For a long time, we did not have data to feed the AI, to give it the intelligence it actually gives output to. So now the input is available in abundance, and that is, the reason why AI is, the flavor of the season right now. We've been using the predictive aspects of AI from a long time. So if you look at sourcing, we've been identifying the right customer segments to source to, the right customer segments to talk to, just like you mentioned, the communication. Rohit touched upon the decisioning piece as well. So predictive aspect of AI, which includes machine learning, has been in use since a long time. And then after that is when we move to Gen AI. So even now, the generative AI aspects of AI are being used into your, intelligent ICR. Your OCR has now exceeded by ICR. So, it's the intelligent character recognition that we do. So all of these aspects of Gen AI, let's say the reading of the statement by Perfios is very much intuitive and a part of Gen AI. We are now moving to something which is agentic AI, right? So very much used in the customer service industry, and comes from the part that, it could also do something that an agent does. And I think that is where the balance, striking the right balance between your regulatory guidelines as well as giving a seamless customer experience, comes into picture. So seamless customer experience, yes, no brainer. Of course, if I were to tell a customer, taking up on the example of the mobile app or a web interface, wherein a customer would be, the key to customer experience, I think, is transparency. And if a customer can see his journey entirely in a transparent manner, I think it definitely gives the best customer experience possible. So with the use of AI, if I take loan origination as an example, and in the example, I'll also address how it balances the KYC and all of this. So a loan origination consists of mainly two parts. It consists of the origination by the sales team itself and then the underwriting, right? So the origination lead, like I said, the predictive aspects of AI have already been in use, and it's getting even better at identifying what is the exact precise moment a customer might require funds. There's a marriage upcoming in your house, it will read your social media feeds, that you've started doing that, and it will just tell you that this might be the right time to give you an unsecured loan, right? So that's the sourcing aspect of it. Now, once the lead comes in and it sits in my system, there are multiple integrations for me to verify his KYC. I can, based on my risk approach, which I decide, and the regulatory guidelines combined, I can use 𝐶KYC, I can use the DigiLocker, I can use the offline Aadhaar APIs, right, and have the KYC verification. I can even go as deep as his Swiggy or his Amazon delivery bills to verify that this is the address he's been delivering to, and have the FI also replaced there, the field investigation part of it. So that is how I can actually read the KYC part of it. Of course, then comes the income documents. I can not only use Perfios and Karza to read the bank statements. There are account aggregators by which I can actually pull the bank statements as well, right? And then do a proper analysis and prepare an automated CAM for the underwriter to go through, right? And then, of course, once the underwriting is done, of course, CIBIL report, of course, was a part of it earlier, but that is very natural now. It's been pulled through multiple APIs, and bureaus are not the only assessing criteria anymore. So, right, business rule engines can be developed, and once the case moves through all of these things, there can be a decisioning. Now, this could be the part of the seamless customer experience that we were talking about. How do I bring in the balance? Now, this is something that is a warning from all the industry experts, even the people who are currently doing multiple government level projects on AI, that there are a lot of hallucinations in AI still, right? And that's why there cannot be a dispensation of the need of a checker being in place, and that checker has to be a human checker, right? So any AI technology that I implement, be it for customers' seamless experience, be it for my onboarding, at the end needs to go through a human checker, Like one of our panelists said, combining traditional wisdom with the latest technology. And I pretty much, am in sync with that kind of an approach, because even today, if you look at the coding world, and I'll just take a parallel example here, there is a very less demand of coders who are very fresh in the industry, right? Because AI is doing the entire coding work. But at the same time, coders or developers who have an experience of 5 to 6 years are very high in demand. That's because once the AI has done the preliminary coding, you need an experienced coder to actually check if the AI has hallucinated or not, if the coding is correct or not. Similarly, once you've implemented AI here, for all your experiences, yes, it will serve all the purposes, but there has to be a checker in place when the amount is, or when the green dollar is actually going into the customer's account, when you're actually taking a decision on the sanction. All those places is where a report can be prepared by AI, all your processes can be automated, but it needs to go to an individual who can actually take a call. At this point in time, till the time agentic AI is there and we move to the physical AI, when we actually have humanoids doing humans' work, ultimately, till that time, we definitely need to have actual humans checking in on the work. So that's the response.
Okay, thank you. So I would probably like to take it as AI and ML can be an enhancement for an underwriter, probably to have a better understanding of the case and probably take a better call based on that, yeah? And obviously, it will improve the service turnaround times to improve the customer experience. Great, thank you. Yeah, moving to Srijan. Yeah. So it's a typically generic question which I would like to ask from you. How can an NBFC harness data and predictive analytics to anticipate customer needs and to deliver a seamless, personalized journey across channels?
Wow, that's a great question. I think fantastic answers by everyone here on the panel, and this question sort of, I would just like to try to add to whatever people have said. So, first and foremost thing is discovery, which is being there at the point of demand creation. If you look at how NBFCs source or any lender sources, traditionally most of the sourcing has been either inbound or prospecting without context. What do I mean by prospecting without context? Your typical sales networks, DSA networks. So in branches or sales or DSA networks, context is missing. Meaning you are reaching out the customer to the customer without context, or customer is coming to you inbound. So you're not there at the point of demand creation, which is changing with embedded finance. In case of embedded finance, the lender is plugged into a place where the demand is already being created. So imagine if you want to do a loan for a wedding, you are already plugged into WedMeGood app or wedding planner app. If you want to do a loan for a consumer durable financing, you are already plugged in at a POS or in Amazon doing checkout finance or in Flipkart. If you want to do a merchant loan, you are plugged in on a Paytm or a PhonePe or a BharatPe doing merchant cash advance. So the most important point is to be there at the point of demand creation. And I think it's happening now more than ever before. Banks and NBFCs have built APIs and marketplaces wherein they can embed themselves into any LSP or any such point of demand creation. Second is using context as king, which is basically allowing the partner to send leads to you or send more context to you with a given lead in flight. So for example, if I am a Paytm customer and I happen to sort of be browsing the shop section, maybe the postpaid line is relevant for me. Or if I'm an Amazon customer, if I'm a regular customer, maybe like a buy now pay later is relevant for me. So as this ecosystem is maturing, banks and NBFCs are also accepting more and more context, not just for underwriting, but also for personalizing the product. So for example, if I am a merchant who's in need for a small cash flow to just meet the surge in demand because of festive season, I don't need a 18-month loan. I don't need a 5-year loan. What I'm looking for is probably a interesting loan product where I can just get a line of credit, buy that additional inventory and pay it off in maybe 3 months, right? So we are seeing both discovery and product innovation being solved. New innovative products like EDI, like supply chain finance. I mean, not to say that these are new, but new avatars of these products are being created. And the modern systems allow you to do that, as opposed to a traditional system where the product is very, very rigid. Second is using analytics and data from different sources to personalize and to underwrite these customers. That's also happening. You can see every distributor, even the large distributors today, Cred, Paytm, or I'm not talking about physical distributors like DSA, but like digital distributors doing embedded finance. They have large, massive in-house data science and risk teams who are making sense of their internal data, building scorecards so that the lender can underwrite better. So now we're in a game where we are talking more about sustainable lending than just, lending is a very, very pull product, right? I mean, if you take a bag of cash and stay on the road, you'll distribute all of it in an hour or maybe less. So I think that is where it is moving towards. And so 3 things: discovery, which is being at the point of demand creation; product personalization, which is being able to give the customer that specific product and not to force fit a random product on that customer; and third is analytics and data, using the context in and around that region and generally available data sources to personalize the offering for that particular customer.
Thank you. Just to add a bit more flavor onto it, now we talked about the processing part of it, I think, largely. So just wanted to understand how an NBFC can probably stay competitive by adopting digital methods or the techniques, where we can probably bring in some predictive data to probably sense the customer's needs.
Yeah. See, I think I'm like preaching to the choir. Everyone here is like super advanced in terms of using digital, and gone are the days. So we've been doing this for the last 9 years, right? It's no more a push sell for companies like us also. We don't have to convince customers anymore to be digital. Digital comes naturally to them, and in fact, they come to us and ask what else can we do. I think some of the things fundamentally are changing. Org structures are becoming more and more simplified. A lot of automation is there in terms of allowing specific team members to do their job well and to coordinate well with other team members. So what we are seeing, I'll give you 3 pointers in the overall technology landscape. What can NBFCs do, and what are some of our customers doing? One is they're embracing multiple channels. They're embracing the fact that systems have to be talking to each other, and all of my channels cannot live in isolation. I cannot have a separate branch channel, I cannot have a separate digital channel, and I cannot have a separate co-lending channel. There needs to be cross-pollination and cross-mingling of data between channels. Everyone is realizing that, because it's very common that the same customer will come to you from the branch, and then they will apply from your partner, and then they'll apply from your website, and you will end up, recognizing the customer in different ways. So there has to be the systems have to be talking to each other. That is what our customers are doing, and a lot of other people are doing. That's the first part. Second is, people are moving more from unorganized ad hoc processes to more documented SOPs. I think that is the fundamental lay of the land. If any AI-related system has to thrive, first thing that you need to do is document your processes and have clear, specific guardrails in terms of who does what. What is the SOP for a credit guy? What is the SOP for an ops guy? What are the common tasks between ops and RCU? Who does what, right? When we started, let's say 8 years back, 9 years back, a lot of this was very fuzzy. Now we are seeing this more and more well-defined. The SOPs, the operating plans are clear. Who does what? This serves the fundamental bedrock for any AI-related innovation, because if you have to design even an agent, you have to be really clear on what that agent does and what does it not do. The scope for its work has to be really clear. So that is the second part. And third is decision making is being centralized. So for example, rather than having too many deviations that can be approved by anyone, people are going for a harder sort of checks to reject more things top of the funnel. They are investing in centralized systems. For example, a central system where all policies and all rules can be hosted, a central system where all fraud-related checks can be done, a central system which decides what is the next step for a file. So a bunch of these centralization and these systems are being invested upon. And this really lays the fundamental and groundwork for AI. And I would add one more, which is a centralized data repository. People are investing a lot in data lakes. So I think that's one thing that a lot of NBFCs we are working with are doing. They have a legacy of working with so many systems, and often data is very, very siloed and is there in different systems. We are seeing people investing in data lakes to bring everything together and then to decide on top of it. So yeah, these are few things that we are seeing in terms of digital.
Thank you. I think quite insightful, and thanks panel for a detailed discussion on things. I would just like to add a few points from my experience actually. So as we go into digital, it's particularly relating to credit underwriting part of it, because since we are actually digitizing most of the things, including policy or deviations or everything, what I see typically is that the underwriters probably taking an exception on that, thinking that system will take care of their part. which is ideally not the way to do it. As Rohit sir said, I think it should be a traditional underwriting system where the AI should support you with the understanding of how you have to take it up, because as India is progressing, I think we are going more of rural, more of tier 2, tier 3s, where our brains and expertise is more required to get into underwriting part of, to understand the customer in detail. AI should be supporting only, or machine learning should be supporting only to an extent where probably you can process the cases. I think in my company there is a chatbot also, where you put in an entry of what you can do to a customer, it will throw up. So I think I've seen that people are getting brain dead, probably in quotes. I think it is high time that we have to probably step up and change that. It is not only digital, it's always human with support of digital. Yeah. Thank you. Thanks all. Yeah.
If the time permits, I have just a couple of interesting observations. And just to respond to your observation that when you go into rural areas and you have to probably rely more on traditional way of lending business or doing business. I think that even there are huge opportunities of doing, if I use the word AI-driven decisioning. And I'll give you my example. Like, we've been traditional lenders for so long, and in my venture, Abhiyan Capital, we are doing primarily rural profile of the customers, where everything is assessment-based. There's hardly any document. But we have created our own underwriting crediting engine, and 100% of the decisioning is done by the system, right? So the system actually decides, and the credit manager can only go by his decision. If the system has recommended, credit manager can decline. But if the system has declined, credit manager cannot approve, right? So there also the opportunity of creating various kinds of tools which can automate decision making and improve the quality of decision still exists. I think all of us know what AI is capable of doing today. I just want to put some thoughts in some people's minds so that there are also limitations, right? See, specifically the expectation, and when talking from a risk perspective of any such models, is predictive analytics, right? So they're able to predict. Now, there are a couple of dichotomies here. Your ability to predict with 100% accuracy, or the quality of prediction is dependent on the quality of data you have. And you can get 100% accuracy if the data is infinite. But obviously, you can't have infinite data. That's not practical, that's not possible. So at some point of time, you have to have limited data. Now, who decides what data to capture, which feeds into the model? That's where the human comes into the play. So ultimately, the purpose of any such predictive tools is to make decisions which are consistent, which make decisions which are away from biases. The bias has been set up at the time of building the model itself, when somebody manually decided what data to collect and what data to store based on which the models are trained. So how do you resolve this, right? How do you find out what data? You can't have infinite data. Right? So that's one dichotomy for which I don't have an answer, but that's something people have to just ponder over. The other thing is that the accuracy of the data, the more accurate the data, the less transparent it becomes. You don't know why the decision has been taken. And that's a big problem. It is a black box. That's why for actually credit scorecards, MLs are never used. You still have logistical regression models running for scorecards because the accuracy is higher in an ML model. But you don't know why that decision happened. It's a black box. So regulator has to ask, you are answerable, you have to do certain things. Why such a decision has been taken? You can't tell them what this is. So there also you have to compromise and use a more efficient model, a less efficient model, but which is more transparent. So again, the challenge is there. So these are the typical limitations when we say which AI has to form, and it's good or important that when you trust in AI, you also trust its limitation. And Sandip mentioned that it's prone to hallucinations, right? And I'll give you a typical example. You ask ChatGPT any legal problem, or legal, if this happens, what have the judgment said? What is the opinion? It'll give you an opinion as per law, this is going to happen as such. Then you say, okay, it could be some judgments. It'll tell you all the judgments. This judgment with this code, everything, this is the judgment. And when you open those judgments, they are completely different. They have nothing to do with that case. Right? Interestingly, anyway, that's for some other time. There's been a case also. Somebody went to a Supreme Court with an AI-generated plea. So anybody who is trusting also needs to know that there are certain limitations which are there.
So the confusion there was in that precise case that you were talking about is the AI prompt used was that give me a judgment where so and so thing has happened. So even though there was no judgment which was existing, the AI thought that it was its job to give him a judgment where this and this was existing. And so it made up a judgment, and he took those judgments as real and he presented it to the court when the court found out that those were not real but generated by AI. So that's, yeah.
Even I have experienced myself. I was actually doing it for some other reasons. I wanted to understand the legal position and I wanted to certain judgments. He gave me those judgments. And those judgments exist. With the number, everything, plaintiff versus everything. But the context is completely different.
Thank you. Thanks all. I think you guys all been a wonderful panel. And thanks a lot for your insights. And thanks all, yeah. Thank you.